Markets going nowhere fast. What does that mean for you and your money? That's next on 3 Minutes on Markets and Money. We have to step back here just a minute to talk about earlier this year. As we came into January, we talked about this sell-off in the markets that was going to occur. And when we got to this bottom down here, we started talking about the market being extremely oversold, due for a reflexive rally. That's exactly what we've seen here. Over the last week or so, we had this reflexive rally back to the 50-day moving average, which was good, and that's what we needed. Since then, markets have been kind of just trending a little bit lower here. Now, this morning, markets are going to open higher as we start to head into inflation data that we'll see tomorrow, expected to be about a 7.3% print. That is likely going to be the high print for inflation this year. We'll see. But markets are going to open a bit. Try to make another retest here of the 50-day moving average is possible here between today and tomorrow, depending on what happens. If inflation comes in weaker than expected, say we come in with a 7% print tomorrow, that could give stocks a little bit more of a boost on expectations that maybe the Fed might back off here a little bit on being as aggressive if we're starting to see maybe a negative trend of growth in inflation. So watch this very carefully. Again, we need to get back above this 50-day moving average if we're going to make an attempt at all-time highs. But really, when you take a look at what's been going on with the market, lots of volatility here. I mean, we've had a tremendous decline, a sharp advance. This has been great, but the reality of it is that we really haven't made any progress since really October of last year. So markets have really gone much of nowhere despite a lot of volatility overall. Now, again, this also depends on what you own. If you own kind of the major stocks in the index, this is probably what your portfolio looks like. If you own a lot of the disruptor stocks, innovator stocks, a lot of these other go-go stocks that we saw back in 2020, your portfolio is markedly worse than what's going on with the markets right now. So again, it's always a function of what you own rather than what the markets are doing. However, the important thing here that we want to get across is markets really haven't gone anywhere despite all of the increased angst in the markets. Everybody's very bearish on the markets. Lots of articles about big declines and bear markets, Grantham, Hussman, others. Hey, I get it. There's a real risk of that with inflation, the Fed now tightening policy, lack of liquidity to grow markets around slower economic growth, slower earnings growth. There is certainly plenty of reasons to expect that we could have some downside risk in markets. All I'm saying is that right now, despite all this volatility that we've had in December and January, now in February, markets really haven't gone anywhere. So again, it's always important, keep emotions in check, manage your portfolio for what's going on rather than what you think might be, because generally what we think is going to happen generally never does. So again, manage for what you have right now. We do have a bit of a risk here with the markets over the next couple of days. So again, if you've had a good recovery in your portfolio, weak positions, continue to reduce those out of the portfolios. Take some profits on things that are way overbought, like energy stocks. Take a few profits off of those, rebalance your risk overall. But then let's wait to see what happens here. Again, a break above that 50-day moving average, we've got a bull market back on our heads. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.